This is Tom Aspray with a Viper Market Wrap video for the week ending May 2nd, and the focus this week is going to be on the new high by the S&P 500 AD line, which has very important implications for the market for the rest of 2025. Those of you who've watched these videos for a number of years or followed, you will know that I focus a lot on the advanced decline line analysis. My research and experience in 40 years of trading shows that it gives you the best under the hood look at the market that most people don't have. This chart, weekly chart of the S&P 500, stark band. We got very oversold down here, and then after 1 week up, a week ago, we flipped back above its moving average. And more importantly, we've been watching this divergence. The AD line peaked here, and when it was making a new high right here, it failed to make a new high in the AD line. So it didn't turn really negative because we were watching this support. But now it's broken out. That's quite a positive sign. A couple of examples why this is important. This is 2019, which is a rocket ship in the market. You can see the AD line was very strong here, consolidated in October, and then, as I noted at the time, broke out again to new highs, leading prices higher, up until February of 2020. There were no divergences here, but there were a lot of warning signs. But interestingly, on the decline, on the COVID decline, look how much further prices dropped than the AD line. That was bullish and indicates, when you see that happening, we also saw it in 2018, it's that it's not a new bear market. Another good example of the AD line leading prices higher occurred in the summer of 2023. You can see during 2022, this is when the high-tech stocks corrected. Really didn't notice it as much in the S&P 500 AD line as you did in the NASDAQ. But it was interesting there in June of 2023, you can see the AD line made a new high, and the S&P was still well below that high. So as I published at the time, this forecasts a new high, which is what we got in early 24. Some of you may remember the sharp market decline in the last quarter of 2018. It was very ugly. You can see the plunge here. But even at these December 10th lows, or this actually was the day before Christmas, this bearish sentiment wasn't as high, or the bullish sentiment wasn't as low as it is now. So we got really washed out here, bunch of headlines, new recession underway, and based on the advanced decline analysis that I teach, AD lines were negative here, so we're looking for, first of all, a move back above the moving averages, and then the downtrends. So you can see, this is just as of the middle of January. We've already moved above the moving averages. Stocks only AD line. All AD line has broken its downtrend. And if we fast forward a little bit, if we can do this successfully, we'll see that we broke through the other downtrends in the stocks only. Soon, we were breaking out also in at that little pullback. We get one like that this time, and you can see we surged to new highs here, but even the market, the SPY was at 244. At that point in time, it was saying that the SPY would be making a new high at above that 365 area. 120 points, or 50% move to the upside. So it's projecting a new high now. So a little bit of history there. I may try to put it together, but decades in, decades out, it's worked very well. And of course, we had the Zweig Breath Thrust signal last week, which is also an encouraging sign. So we look at the NYSE composite. Nice rally, moved back above the 20-period EMA. And we're probably, everyone's looking for a setback, but I think more of the shorts have to be squeezed first. You can see the stocks only has moved finally back above its AD line, it's acting weaker, the weakest of the three, and the all AD line is also moved sharply higher. The upward acceleration is even more evident in the daily charts. We switch this to daily, you can see, look what the S&P 500 AD line has done. So, this was starting, we had a positive trend here. We broke out above this point right here, and that was a strong sign that the correction was indeed over. So the market doesn't look quite that extended, but you can see the S&P is at 56.86, and its 20-day EMA is 200 points lower. That's pretty extended. The fact that the moving average is also rising is a positive sign. We've added the pivot levels in here. You can see the new monthly pivot, and actually the daily Stark band, is quite a ways below the market at 53.66. The R1, the first resistance, is at 58.97, so that's over 200 points above where we are right now. And the R2 is at 62.26, basically a new high. Look at the AD line here, very strong, a bit overextended. You look at the gap here, so we expect to see a pullback here at some point, possibly this week, now that the market survived all the big tech earnings. As I noted to our clients last week from the AAI survey, the bullish percentage dropped further, so the ratio or the difference of the bullish percentage to the bear also dropped down to minus 38. So pretty severe. Levels to watch here are likely the high back here from March, which was at 576, 41. So anyone who's probably still short has a stop above that level and is feeling the pain. Looking at the daily advanced decline line and the 100-day moving average on the SPY is now at about the same level, 576.59. You can see the breakout we've been looking for since about March. Since we broke down here, we've overcome it in the S&P 500, also in the stocks only, and we're just on the verge of taking out the major resistance here at line C. Here's the QQQ Trust. You can see it's made it up and getting up towards its R1, which is at 502.56 is the next target. That's also where the daily Stark band is. The pivot right down here at 452. We got a pretty good entry back in here. AD line for the NASDAQ 100s confirmed the price action. Another new high there. So, we're at 488, and the AD line is saying we should get above 540. When will that be? I would say that'll probably happen the next year. Could happen in a month. Could happen in 3 months. And you have a clear technical evidence that if we break below these lows, that would call that forecast into question. Also, finally, the relative performance. Remember, this measures which one is leading, is now signaling that the QQQs are starting to lead the S&P. Here's what the weekly chart looks like. You can see sharp new weekly high in the AD line, held the support as we mentioned a couple weeks ago. That was a bullish sign, and it's continuing to point even higher. One of the problems for the market had been in March and early April had been the surging number of stocks making new lows. You can see right here we had 1,600, I think. Yeah, actually, yeah, 1,800. Now just 51. So this hasn't given a strong new buy signal, but it's the trend you want to see. So, first barrier here is going to still be that about 230 level in the new highs. NYSE Composite shows a similar pattern. 58, new highs, 24 new lows. That's a trend in the right direction. Some of you may ask, well, what about the divergence? Since way back here we had 500, say. You can't get too worried about those divergences until a certain amount of time has passed. We're always watching it, but you can see back here we had a divergence for a couple of weeks and pretty severe. So it's just something that you're looking at the daily action, which I teach all my students. You should look at the numbers every day. Check out the new highs, new lows. If you start to see a few days where there's more new lows than new highs, that sends you a message. Looking at the VIX and the VXN, we thought we were seeing that the rally was over up in here. We had this rebound back, and then over a week ago when we were looking to get long the stock market, we can see it just ran up to its moving average, which was declining in both of them, and that was a sign that the volatility had turned more bullish for stocks. The growth value has rallied sharply. We can see broke this support here, got down into just about this low here, and have had a nice rally. So that suggests that growth is going to continue to lead. What you wouldn't want to see is a move up to about this 210 level and then a sharp drop back. So we'll be watching the 20-week EMA. MACDs down here are trying to turn around. Been some great stock moves. One of the favorites for the Viper Hot Stocks is Palantir. We got 91.81 right around in here was our average price. We took some profits on half the position at 122.80 or something, about 34%. Of course, past performance is no guarantee of future results. We're going to ride this out. I think it could get to 136 to 140, but even last week it had a drop from 118 to 110. So earnings first part of the week, you can see the OBV and everything is positive. A couple other stocks, Uber started to take off last week. It acts very well technically. You can see from holding the monthly pivot here and then starting to move up on increasing volume. Dash was the recent addition, just Thursday's open here. We were fortunate to get in at 194.41. It closed at 205. Unfortunately, we didn't get their second entry, and unlikely we will. So we'll be watching it for a place to add to this position. Let's look at the T&J watch list. You can see a lot of new weekly buy signals. EEM, it's an emerging market. The tech averages all came through, as did Korea here. FDN also. Let's examine a little bit more. So Gamer, Wisdom Tree Europe hedged, real estate, minimum volatility. You can see the fact that these two turn positive weekly but are still below their quarterly pivots. Industrials, mid-cap, utilities, Total World, VWO, industrials, financials, XLK, XLU, and the Pure Growth RPG all gave weekly buys. You can see in terms of growth, still not very many above the quarterly pivots. We have new weekly signals as mentioned. Some of those value also pretty low. The short ETFs are pretty much all negative now. So it was a sign to, as we mentioned during the week, we started to see the DTS flip from positive on the inverse ETFs to negative, sign to cover shorts, and all of the long leveraged ETFs are now positive. So let's look at the sector report. Energy still weak. You can see lots of red here. 16.7. Not a positive pattern here. A rally failure. So we aren't in any energy right now, and that looks like the right plan. Materials still a tough call. We started to see some positives in some of the material stocks. We are still in Newmont Mine. It looks like to me the pullback in the gold miners is about over. Industrials, pretty positive setup here. You can see 3 DTS Caterpillar and Deere, and weekly in ETN, Honeywell, Deere, and ADP. Consumer discretionary, either a pause in the downtrend, so next week we could see a definitive move. Starbucks at a daily buy after its earnings. Home Depot and Lowe's both flash positive on a 3-day. Still in staples, it's not violated its uptrend below its moving average. Remember, the monthly relative performance on the consumer staples looked very strong. Healthcare has been surprisingly weak. I really thought we might see a return to the uptrend there in healthcare, so we haven't seen it yet. So a few positives there, but it's just on the sidelines for healthcare. Financial, some pretty interesting, the banks, obviously, and also we're seeing some patterns of, we had in our stock scan, we saw a bunch of insurance companies that we like, and of course technology, pretty what, lots of green here. We still got some time to move here. NVIDIA is just a weekly. Cisco, Oracle, Adobe, and ACN all gave 75% of them now have 3-day. That's a good sign. We're obviously still in, consumer communication sector. It's slightly positive based on the RS, but a lot of good stocks, including Meta and Google. Utilities holding their on. I think that they're still a valid play given interest rates. And then in real estate, it's trying to hold its uptrend. So if they were to drop below these lows, I would turn more negative on that group. Well, that's pretty much all I have for today. If you want to see what our current positions are, if you're not in the market, you want some specifics, obviously, you can subscribe to the Viper ETF for the stocks. So here are our current positions. Consumer staples, gold, communications, utilities, financial, Silver Trust, and the QQQ. And in stocks, we talked about Palantir. At 118.44, it was up 29%. Of course, it's up in the it's gained quite a bit since then. OBER, Fastenal, and Newmont Mine. So this is a report. We'll be updating this after Monday's reports. So great. Hope you enjoyed the video. Pay attention if you have stock charts or something. Look at some of the AD lines. I think you might become a believer. If you want training, of course, we can provide that. Thank you very much for tuning in.